Next, I want to introduce my friend, Bruce Cahan, who is a professor at Stanford. He's also the CEO of Urban Logic. He is all about financial engineering of the emerging space economy and marketplace, and has been part of some different research activities. And so he'll share more with you. And I look forward to hearing that. Welcome, Bruce.
Thank you, Casey. Thank you, New Space Nexus. And it's great to be back in Albuquerque. You know, sometimes as someone who's a fan of economics, it comes as a great surprise to me that we dance around things when we could actually talk about a system that creates the impacts that we want and some that we don't want. So this presentation tries to scope that. Next slide. We've been talking around the point of the competition globally with centrally planned economies and our fixation on them, but also our concern that they do things differently than we do. And that's of their own nature. It's a species kind of a problem or solution. And we should just recognize that that's how they do it. And that's their species, and we are our species. And we should take traits that have evolved in their species and see how we want to adapt for them. Next slide. So how do we finance the space economy holistically so it grows sustainably, meaning predictably without boom and busts? I've given you in this presentation about 7 ways to look at what we have and what we need. Next slide. Let's look at integrated value accounting and visualization. A really boring topic at 11 o'clock on a Friday on the 3rd day of a conference. Totally. And next slide. You see here what is the IR, the Integrated Reporting Framework, that is used in some annual reports to explain how 6 forms of capital go into that center area, which could be a business or it could be an economy. The 6 forms of capital are financial, manufactured, intellectual, human, social, and relationship, and natural. We were just talking about some of the raw earths. Those 6 capitals go into that system, that company. They're transformed and they come out in a different form. If we want a robust space economy, we've got to balance the workings of those 6 capitals. We have to account for them. We have to be anticipatory for their progress and their adaptation. Next slide. Here you see a depiction of how the integrated reporting framework aligns up to the Sustainable Development Goals, which, you know, whether you like the SDGs or not, and we have problems with them, it does show why any of these symmetries and alignments matter to cause greater impacts. Next slide. I'm showing you a bank in Europe's annual report where they've tried to explain what the bank does as affected by and affecting these 6 forms of capital, to explain to their shareholders and their bondholders whether they're going to be in business next year as a bank, because annual reports typically only look retrospectively. How much money did we make or lose? This is showing somewhat the momentum of operations that a bank represents or any institution represents company, so as to assure their stakeholders that they're going to be around to perform, right? Next slide. Rubik's Cube and readiness level sanity. I hear tons of conversations about TRL and TRLs of 1 through 6. There are other forms of readiness levels that I'll get into, but what I'd like you to imagine is that we're solving a Rubik's Cube for financing a particular space company or space activity that can tell its story to a certain extent as of a given point in time. And that they, if I can use the metaphor from Austin Powers, which I recommend rewatching, I did recently, talk to the hand in the face, say, ain't listening, let's figure out which stories go with which investors or which lenders and which grant makers, okay? Next slide. You see here the results of some work with my colleague Sean Ross at AFRL to identify not just the TRLs, but the other readiness levels that if you look at economic history, how did the Wright brothers not create a company versus Glenn Curtis of motorcycle fame create a company? How did some of the early locomotive engine manufacturers create companies or not? These other readiness levels synchronize to some stepwise progression, which I'm about to show you with TRL. So if you're just doing TRL to 6, and then you try to figure out, do I have a business model to sell what I'm now technically able to create? As you've heard from other panelists, and you know from your own experience, that's probably not going to work so well. So next slide. You see here that you could have a TRL of 1, but you better have an MRL, a manufacturing readiness, on your scope. So TRL of 6, let's say, you better be at MRL of 4. So some of the quantitative research that goes with what I'm showing you says that if you're ever 2 notches behind on any of the readiness levels, you have to be advancing on all of them, not at the same number, but you have to be advancing in each one. Next slide. So you see that only certain stories in that Rubik's Cube can appeal to VC investors at a time. And VC money is pretty expensive. I know Megan and Dan will shoot me for that, but it can be pretty expensive when you give away the slices of the company to that level. Next slide. And then here's next slide, please. Thank you. So here's a quick graphic of the 5 valleys of death, not one, that Sean and I have identified, and how getting it behind the driver of the succeeding readiness level, you know, is a strategy for overcoming the oncoming valley of death, right? You would want to pay attention to certain readiness levels as you approach a valley of death to get over. Next slide. So the life cycle of how organizations grow, wither, and repurpose. I am a recovering Wall Street lawyer. I have done bankruptcy work. So I'm bringing you some wonderful, news on a Friday. Next slide. As you well know, companies, even programs, they grow. There's a birth event. They mature. They sometimes can decline, and then ideally they repurpose and renew in response to market and other dynamics. Next slide. If it all goes well, there's a hockey puck, and it, just everything goes beautifully. There's an exit. The investors and the employees are really happy. Next slide, but it doesn't always work that way. And we see that in every part of the economy, including the space economy. Next slide. So there is a need to look at bankruptcy and commercial space capital. Here, next slide, please. Here's a very short list of just the last year or so of bankruptcy and distressed asset sales in the aerospace arena. This is a reality check, folks. I'm not, I'm not saying it always happens, but it does happen. And the question I have, which comes from conversations with Bucky and others, is what happened to these companies? First of all, what did we learn from their failure? What RL or other issues did they not anticipate correctly? What did they not read in the market and the product market fit? So what is analogous to what we would do in medicine? What do we learn from patients getting sick and they didn't take the cure? But also what happens to these assets, those 6 forms of capital I listed? What happens to the assets? Do our peer allies or adversaries get these assets? I don't know, but I'm worried. Next slide. There are, bankruptcy is a fairly long process. I know this may sound like a funeral director saying it's good, but suffice it to say that the bankruptcy court's job is to decide whether the bankrupt company can be revived and pay some percentage of the debt that it owed to its secured creditors. That is a process that's long enough to intervene should the government or others want to intervene to say, you know what, I have a different way to use these assets. I have a different way to approach the business model that they looked at and to make a bid and come out with the assets, including the people, most of all the people intact. Next slide. Yep, there's bankruptcies. Next. Yep, SPAC wasn't a confetti of money. So let's look at, next slide, please. Let's look at what are the space activities that we'd want, let's say in 2030 or 2035, who's going to produce them? And what's the capital that the companies are going to need in the different flavors of capital as they can tell these different readiness level stories that they will need. I mean, that's kind of a same approach. It's not the centrally planned anything. It's our approach. It's our form of economics. So next slide. You see here, and I've shared it with Dan and others, when Tina Highfill and our friends at Bureau of Economic Analysis do their analysis of the space economy for purposes of determining its contribution to the US GDP calculation. So it's a constrained, if you will, activity of estimation. They find that over 80% of what they've tagged as the space economy is in the private sector. And this echoes a lot of what we heard in the panels, that if you're going to build something just for the government, and that's your long-term play, that's not reality, okay? That could be how you start, and you could get an anchored customer in the government, but significantly, you need to appeal to folks who are already using and depending on the space asset or service. Next slide. Here's a little more detail in the BEA calculation and where, so information broadcasting and telecom being a large share of that GDP contribution, manufacturing, computer, electronics, etc. Next slide. If we were to ask, how should we leverage and augment the 2021 portfolio of space activities I just showed you to prepare U.S. commercial space for 2030 or 2035? How should we organize and provide the capital at the right times to create and maintain the space assets we want to use in 2030, 2035? Next slide. You see that we don't even have a consistent menu of what space activities are defined as. Okay, we've got NASA with its taxonomy from 2020. We've got ESA with its taxonomy from 2023. And would there be alignments? Yes. Would there be a definitional, next slide, please. Would there be definitional, rigor that needs to come together? I think it does, because without these common definitions of what space activities we want, we're not going to be able to tell the consistent story to all the stakeholders, including finance, including insurance, that we need to do. Next slide. So some of you, I don't know, did any of you get a call from the Bureau of Industry and Security to answer what commercial space activities you are involved in? That's what I expected, just so you know. Okay, just so you know, because last year, the censuses, and this is in Commerce, Bureau of Industry and Security did a survey of commercial space firms. Next slide. This was kind of their call for participation in the survey. Next slide. And in it, they say they're conducting a comprehensive assessment of U.S. civil space, industrial base, in partnership with NASA and NOAA, and NESDIS, et cetera. Not necessarily with DOD. But again, coming back to that 80% figure that they have, principal goal of the survey is to better understand domestic civil space industrial base. Okay, so next slide. And they have done decades of assessments of the resiliency of our industrial bases for different purposes, and some of them I've listed here. Next slide. More and more. Next slide. More and more. But when we get to, click one more, there we go. Okay, so when in 2018, for instance, they surveyed rocket propulsion capabilities, and they categorized the companies who responded into companies that were at low or neutral financial risk, at moderate or high financial risk, and those that didn't provide any answer to the financial risk question. And you see in the red bar that they had enough financially risky companies that you, in the supply chain conversation that just happened, might wonder, first of all, was everyone as truthful, let us say, in answering this question? Are they financially at risk? And were they modest or self-congratulatory in that answer? But also, how would we, if you depended on the rocket propulsion coming from those 2018 survey companies, how would you ever know this? How would the government ever know it? How would partners trading ever know it? And what would we do about it? Would we just let those companies kind of flail around and fail or go through issues? Next slide. And here you see what are those companies manufacturing? You know, what are they providing in the rocket propulsion supply chain? But you're also seeing that 24% of those having profitability issues are at risk. Okay, that's not a good thing. Right. So in conversation with Casey and obviously hearing from Bucky as well, I want to propose that we do a survey of commercial space finance readiness and risk for this industry, because we don't have good data on it. Chris Quilty, who's a colleague and a friend, you know, he picks up whatever the deal flow statistics are, but that doesn't necessarily tell us where the gaps in financing might be. So next slide, please. Thank you. You know, we could ask a panel of questions, the normal demographics questions about where's your company and which space activities are you doing, and you have federal contracts, et cetera. The next slide. What do you expect your average annual revenues from space activities to be, and what's your best estimate of growth rate? This could be an anonymized survey to protect the innocent, of course. And thinking about your company as capitalized, what percentage is debt versus shareholder equity? Thinking about the debt portion, what percentage is long versus short term versus lease finance? Thinking about the equity, are you currently raising? Why and why not? Think about your burn rate. How many months of liquidity do you think you have? These are the kind of numbers, data, in an industry that deals with data that we would want to have. Next slide. As you look at capital markets, are you worried, neutral, or optimistic about the debt and equity markets, et cetera? The bottom line to me is that we need to see beyond our own Truman Show. We need to get at the problem that's in front of us. We need to understand that the transparency that our system of economics uses to provide capital where and when and in what amounts and at what costs it needs, that transparency is on the industry to provide the financial sectors. The financial sector can't make this stuff up. The equity analysts try to do that when they promote investments in various companies, but I think we can do a way better job of determining the kind of the flavors of capital we need for that Rubik's Cube of I can tell a certain cohesive story at a certain point in time to a certain group of investors or lenders. Let's get about that, I would ask. And so with that, I'll pause and say that's what we did. Comment? Yeah.
I love the idea of the survey. How much risk is there to the overall industry if the emperor has no clothes? If we find out that people have been presenting rosy projections, my concern is that a lot of people might put the optimistic spin and then you don't actually get real data. So if something were revealed from this survey that said, oh yeah, all of 90% of the companies are on the knife's edge, would that pose a existential risk to the industry that would motivate companies to not want to participate?
It's a great question. I actually have some dialogue with the prime curator, let's say, of that 2023 survey to cut the data that would include, to the extent legal, some data that other parts of the government have about the same companies and or NAICS code activities. So there is some cross proof of how much um, creative storytelling would come back in that survey that we can do, particularly for companies that are defense contractors. There's a significant amount of data that the DoD can ask for to get underneath this financial risk question, not to penalize the company, but to get out ahead and say, we know you're going to have this, let's solve it before you call us and we have to default. Yeah, sure.
Bruce, thank you. Normally to get that good a laugh, you have to do a 2-drink minimum. So I greatly enjoyed your presentation. To the Rubik's Cube, in building our company at KMI, we've frequently run into the issue of TRL does not tell the whole story, but if it's the only data you have to measure, it's the only one that is measured. So are there efforts to expand this Rubik's Cube so it doesn't just live in the halls of this building, but actually gets out into whether it's the venture community, into SpaceWorks? I think it's something that's needed, and I've already sent you an email about it. But is there plans to develop this so it doesn't just live in the wonderful thoughts of today?
Yeah, no, thank you. I cornered Colonel Raleigh to say, you keep asking about how to quantify your investment decisions. And I interpret that to be which stories do we believe have potential and whatever. So when banks lose money, so I'll digress for 1 sec. Half of the safety and soundness rating of a bank, okay, pie chart, half, relates to how much in NPLs, non-performing loans, the bank holds, because the regulators make the bank reserve for those losses. If you have half of your risk in non-performing loans, you would want to take the steps in the Rubik's Cube to manage the readiness level valleys of debt, right? Or to recover from them. Sean and I have written 5 papers, one of which is published, one of which Sean included some internal DoD misstep stuff. So I can't even see the paper I'm the co-author on. And so to your point, we would like to get this readiness level research and the quantification of the relationships amongst the parallel LRLs out into the world. If you have ideas for that. But I think it's, conversations with Bucky, it's conversations with others who are making investment bets and then managing the portfolio of bets they've made to say, how do we be anticipatory? We can talk about how to expand the research. Oh, here's Bucky.
I obviously, it's nice being within a commute distance and having my breakfast partner on the stage. But I'll tell you, we've collected a lot of information just because we're transactional across small, medium, large, and industry leaders, the whole gamut. And some interesting things that we find. One is I talked about some of the stuff about on the manufacturing readiness, which is awesome. Because if you're low on the MRL, it means that you haven't really evaluate, or you haven't progressed to the stage that you're really ready to develop a product that you can take to market. And so I would double down on the two, no more than 2 gaps in there. And what I see almost habitually is you have the founder CTO, right, who has a great idea. You're all in the room, and you get to sufficient capital and sufficient TRL, but you where you stumble, you start to have that decline is you don't bring in a professional chief operations officer, a professional CFO, or even a professional CEO to help those other readiness levels, right? And so the company actually stagnates, and they're crushing it on making the technology even better, but they don't even understand the market they're trying to address. So I think, so there's a lot of wisdom in that. Things that we ask all the time is, what's your burn rate? And how much runway do you have? Right? So, and you should know that should be right in your hip pocket. Because that's a lot, those are easier questions to ask than, well, you just closed a $30 million Series A. This is great, but you know, if we know, when you tell us what your burn rate is, you're really telling us how effectively you're using that money.
Yeah.
Because all the satellite companies pretty much all fall within a range of a certain burn rate. Rocket companies have extraordinary burn rate. And you know, it could be like millions of dollars a month. And there may be ways that you could do these things more efficiently, but we can derive a lot from just those two things.
I think we
right?
can, Bucky.
That's right. And if you're, and the other thing is the approach. If you're, I'm going to be vertically integrated. Well, you better be a billionaire, right? So, a lot of people, and there's been companies have had really bad experiences because they made really bad choices on components. So really understanding the supply chain in depth as part of that product journey, and you should be very demanding because when you don't choose well, and you make another supplier look, you know, artificially good, that spreads like wildfire, and then everybody suffers.
Well,
So-
and this comes back to the commodities
right.
exchange that, you know, I've proposed and that we continue to talk about is how do you forecast who's going to be producing which space activity to be able to deliver it as a commoditization readiness level at a date and time for how many units. That lets you backtrack to what Bucky's talking about, which is which companies are going to survive to supply that commodity.
So we have information. We're very, very protective of the information that we get from companies. And so we're probably not the right people to do the survey, but we could probably help fund a study or something where we get participants who can do this. I really think you won't get the credibility unless you have some government backing.
Well, that's why I raised it with BE.
And we have a very strong partnership with Commerce. So that'd be helpful as well.
I think it's a natural follow-on to the 2023 civil study that they did. Anyway, thank you all.